We are live. This is the market update. I'm your host, Bill Noble. Is this a crash or a correction? I'm betting correction, but I'll tell you how it could turn into a crash. Want to know more? Want to see the stock charts? Stock market is key. If you need a roadmap in crypto, subscribe to this channel. Turn on alerts so you know when we're going live or posting a new video, and smash the like button. Support the channel. All right, let's welcome who's on the stream here. Dulio, Bull Runner is here. GF, Richard Barry from Georgia, welcome. Robin is here. Zoran, SFG, welcome. Israel in the house. Nice to see you. Nice to see you from the Middle East. Montgomery, Texas, Rudy, Joseph, right? The Netherlands is here. Welcome. Ocho with some notorious love. Thank you. Winter Park in the house. Carpe Diem, hit the like button for the Fed minutes, right? Austin, Texas, by way of North Carolina, welcome. Reverend Flashback, blessings from Germany, thank you. We'll take all the blessings we can get, right? Coinbase Optimism Fork airdrop tomorrow. Shizzy with some alpha, right? Let's see, who else we got? Bit Freedom, Andre. Everybody in the house. Okay, let's get to some news. Actually, let's get to some comedy before we get to the news. So, welcome to CryptoGPT. Not investment advice, not even, I don't know, not even research. So, check this out. They built this website, and it's fascinating, right? CryptoGPT is a ZK layer 2, right, that allows you to monetize your own data. So fascinating concept, right? You type stuff into ChatGPT, they capture your data, right? Like, I don't know, it's got a ton of data. Me trying to write different variations of love poems for my girlfriend every day. That and help with our live stream. So what they want to do is they want you to own the data, or at least this is my interpretation. This is not from them. They want you to own the data. So they want you to be able to take, or at least the ZK rollup or the privacy component would be that you would be able to swipe your cell phone and somebody at a bar would be able to tell that you are 18 years of age or older without you giving them your age, your name, your date of birth. The data stays with you. You own it. So that's like a key tenet of Web3. And I'm like, damn, we got to go listen to the Twitter space on this. You know, we go to the Twitter space. They put on somebody my daughter's age who says the word trillions of dollars, like, I don't know, as many times as she can. They get through some technical difficulties, which I understand. And she just looks forward to, letting you guys know about the project roadmap. Now, I work for a small crypto project, right? And I'm on those Twitter spaces, right? So my job is to add alpha to the people on the space. And also, we want to communicate the message about our project. And, I'm always asking myself, are we doing enough? Are we saying enough? Is the content good enough? I always ask that about myself. And then I listen to this, right? It's like, hey, welcome to the market update. We're going to have trillions and trillions of dollars in $1 trillion marketplace. And you're going to make trillions. And this is a life-changing, once-in-a-lifetime generational opportunity. Okay. Remember, with AI coins, first of all, we wish these people well, whoever they are. With AI coins, you got to make sure that either they know how to capture the data or that they have the data to make artificial intelligence useful. I would love it if something like this turned into a great project, but I have to admit, it could turn out to be nothing because we saw the snazzy website, we saw the Twitter space, and we're like, oh my God, we got to listen to these people, and they didn't say anything. So when we establish whether or not this is a crash or a correction, let's go with correction because I got caught. Guess who got caught? I got caught. I'm like, oh God, AI and privacy. or what I think is privacy. Let's go check it out. I FOMO into the Twitter space and I'm like, shit. Okay. At least I didn't buy anything. At least I didn't buy anything. ChatGPT reportedly blocked on Chinese social media. We don't want anything created by Silicon Valley in China, I guess, even though they're probably way ahead of us in AI if Kai-Fu Lee and his book has anything to say about it, claiming that AI is used to spread propaganda. Well, communists would know about propaganda now, wouldn't they? Right? Now, wouldn't they? Blur pushes second crypto airdrop to keep NFT traders off OpenSea. Now, there's a subtle thing going on here about corrections and crashes. I notice how everything that we came up with for news, it all had a positive spin to it. So it's like, ooh, FTX, booga booga. That stuff's gone now. Now Web3 is back in the headlines, which is making me go, oh, you know, some serious cringe factor when all you get is positive headlines in the news, right? It's like, look at Solana, right? Remember, I wanted to own Solana when Solana was dead. Now it's like Helium network to migrate to the Solana blockchain. I'm like, oh my God, please. I mean, I know I was bullish. I know I was, but you can't be bullish when people start talking like this. You have to be either defensive, neutral, or you have to manage risk, right? It's like, oh, Solana's back. Yeah, okay. At 29, where were you at 9? Google Cloud broadens Web3 slate by joining Tezos. Now, this is legit because as we've talked about on the stream, and I'm not going to do it again, if Web2 doesn't embrace Web3, Web2 is going into the Star Wars garbage compactor, right? With the walls closing in and the monster underneath the floor for anybody who saw the 1970s original. They are going to continue to produce positive news flow for crypto, which really argues for a correction. Now, I've got a slight allergy to overly positive news, but this NFT metaverse narrative is picking up steam. Uniswap traders can now buy NFTs with Uni, SHIB, or any other Ethereum-based token. So the whole NFT market just got more liquid, courtesy of Uniswap. That's really interesting. Really interesting. Now, can the equity market blow up? Yes. Can the Fed scare everybody? Yes, particularly since the Miami real estate bubble has not popped. By the way, if you live in Miami or you live in Florida and you know anything about Miami real estate, drop us a comment. You know, visit me on Twitter, crypto_noble. Let me know. I'm dying to find out what's happened in Miami real estate, straight from the source. So is the Fed going to get pissed off and scare everybody? So if you have scaring everybody with NFT liquidity being improved, that's a correction. If you have euphoria with, you know, bad news from the Fed, that's a crash. I'm still on the side of correction. Titanic artifacts tokenized as NFTs. Really kind of funny that we've got these news headlines, right? Like FTX, end of the world. Oh my God, crypto going to zero. Charlie Munger says he's leaving America because of crypto. And now it's like, ooh, Titanic on the blockchain. Hey, this is like we do this in Emerging Asset Group with Block 47. We're going to put New York's Diamond District on the blockchain. So I'm all about this. But again, it's really about the media. Okay. Now, staking in ETH. Is everybody going to come out in ETH and sell? 3 days ago, I would have said no. And I have to be honest, this narrative may pick up steam, right? Everyone's going to unstake ETH and panic. That may be true. You have to at least respect it. Before I was like, whatever. Mastercard to allow crypto payments in USDC. Gee, I hope their compliance company, their compliance department is on board with this, right? The whole idea that USDC is toxic for portfolios and you're better off in crypto, is probably what's going to prevent this from being a crypto. It's going to help. Let's start over. The stablecoin problem is going to prevent a crypto crash. And it just have it be a crypto correction because there's going to be an organic bid on the way down for Bitcoin and Ethereum. Yeah, stocks were down, crypto's down. Weak longs are getting washed out, but you still can't hold stable coins. Now, just in case you thought there was nothing bullish crypto, Bank of International Settlements chief on crypto, a technology that doesn't make for trusted money. Now, as you may be able to tell, I'm not exactly a svelte individual. So, I'm a 3X guy. But I'm looking at this dude, and this guy is trying to tell me that crypto is a failure. Is this the guy that you want to tell you what to do about your money? I would say no, right? Like I can play this, right? And just the reporter, okay? That's the face of fiat. It's like an inflated Jerome Powell. To be honest, I feel sorry for the guy, right? He's on the wrong end of the refrigerator, and sadly, he's on the wrong end of a financial revolution. Okay. All right. Let's check out as we look at this person and we think about whether or not we like crypto or fiat. Okay. We have Steve J. We have Luis Perez. Jason is here. Hans, welcome. Right. Like stories about the history of markets. Crypto to cash says the bubble has to pop. It's just going to be a 20% correction and then back to the news. Crypto Bullseye is here. Welcome. Good news equals bad news. That is very possible. Charlie S is here. Welcome. Welcome. Okay. Greg Swanson, the Swan Dog is here. Chanel, Double AM, liking the channel. I appreciate that. Don't forget to hit the like button. Yes, there is no sound on the video. I just wanted to, show our friend here, Freddie Fiat telling you that, crypto has no use case. Crypto does have a use case, which is why if they smash crypto, it's worth taking a look at. It's worth taking. We got to have some powder. Mr. Moby Dick in the house. Nick F, welcome. Okay, now Nick is asking, Bill, if it's okay to ask, it is. Do you hold BTC long-term or only trade it? Okay, it's not investment advice, but I do think you hold BTC long-term. Okay. And ironically, even though I've heard people talk about dollar cost averaging, I think if you started dollar cost averaging at 23,000 and you got lucky, right? And this market actually did kind of come unglued in March, then you would be sort of hoovering it up on the way down. I mean, there's an eclipse. There's a big eclipse in April. And there's always a truckload of volatility, which in a stock market is polite for, blowing up and going down. Right. There's an eclipse in April. When are we going to start to feel the impact of that eclipse? Now? Maybe. In March? Possibly. So I do think you set up Bitcoin long-term. And I think in some wild event, if you ever actually did see Bitcoin back down at 20, just in the case of a crash, that would be Christmas. And I think it's the same way in equities. Like you're probably going to see a puke low in equities in March. Now, will that puke low be 5% from where we are now, or 3% or 20%? I don't know. I mean, I can crystal ball it only so much. The answer to your question is, as my friend Crypto Keep says, you hodl like it's hot, right? You get your crypto, and then if you can get your crypto in a dollar cost averaging fashion Now, even if you don't want to do it that way, please have a plan. I know everybody on YouTube says that. And when the market's going up, the plan was to go with the trend. Now, if the trend is not your friend and we're in corrective mode, trying to pick our spots, time to think, time to have a plan, time to write down levels. I'm doing the best I can to at least to help you formulate your own plan. And we're actually working it out together live on the air. Driftless Crypto. Alexandro, welcome. New Orleans in the house. Okay. Mr. Moby Dick is like, I'm with March, maybe even June. Yeah, you know, I would love to come out of March. And then if there's a dip in May, you know, sell in May and go away, I would love to grab it then too. Because I want that summer rally. Okay, let's go to PowerPoint before I dive into live TA. Because we may have to do everything live TA over the next couple of days. Okay. Now, this is ETH. So this is the whole uptrend from the bottom. 23% is at 1583. 38% back is 1488. And 62% back is 1331. Ugh. Right? Now, it may be logical since you have sort of a 5-wave structure here. 1, 2, 3, 4, 5. That you could see 1488. If you did see 1488, the question becomes, what would you do? Would you lose it? Would you puke your whole position out? Or would you have cash ready or have even more cash ready in the event something stupid really did happen at the start of March? Okay. Now, about the start of March, just as we look at the ETH chart, we contemplate this. I mean, this is kind of like the crypto strategy room now. I will never forget March 9th, 2009. That was the bottom of the stock market at this frightening number of 666. I was like, that can't be the low, but it was. It was. The stock market heaved lower in 2009 into the absolute abyss. Into the abyss. And that was the low. And I remember somebody like Jim Grant from Grant's Interest Rate Observer, which is like, you know, it's not my it's like the interest rate newsletter read by the generation in the market before me. Okay. This guy said, from great pain comes great opportunity, and this disaster will lead to one of the biggest bull markets ever. And he was right. That was March 9th. That early period in March, just, I don't know, it just feels like a big inflection point. And if there's a puke lower, right, that puke lower may occur early in March. So I don't want to get hysterically bearish. It could be a flash crash. I don't know. It looks like the whole war thing was a non-event, right? The whole 1-year anniversary of the Ukraine war. Putin made a speech. Nobody's going to win. Nobody's going to lose. So, you know, that may come into play later, but it doesn't seem to be a factor right this second. That doesn't mean it can't be in a week or so. What it does mean is you want to be prepared for some sort of event in early March. It could be a low. Could be. Wow, we got 100 messages already. Village Cooking. It was March 9th, 2009. Okay. The Dawn from Vancouver Island is here. Welcome. Bubba. Driftless Crypto says, do you survive to the global liquidity is everything for risk assets way of thinking? Okay. So let's go to the stock chart and let's talk about that. So when it comes to global liquidity, you have to talk about speculation, right? Is there enough liquidity in the system to have every altcoin that you could think of 10x? Because that's what happened in 2021, right? From 2020 to 2021, your average return on an altcoin was a 10x. We do not have enough liquidity in the system for a 10x because the Fed is at least keeping Fed funds high, is talking the tightening talk. I still think they're printing underneath the table to prevent a calamity, but it's not them printing 6 trillion in 1 month like what happened last time. So everything doesn't moon all at once. This is why I have the sector theory, right? That things rally in stages and they may correct in stages. So no money equals no rally. I don't agree with, because crypto is an alternative asset class, right? In other words, you got, what did you get? A 40% return in Bitcoin in 2 months? Like, where can you get those kind of returns? You can't. You can't get them in legacy. Crypto is also the future of technology. Like, how much liquidity do you think it takes to move big tech stocks with $1 trillion market cap? A lot, right? Boomers are net sellers of equities. And frankly, if equities did nothing, I wouldn't be upset. So where does the money come from to flow into equities to make stocks moon? It's not there. But there are young people out there, and there is a ton of cash sitting in money market funds. And where does it go? Does it go to stocks? Maybe. Especially if they all puke it out in March. Maybe. But I still think that there's an opportunity for crypto to be the future of money and the future of tech, because you don't need 6 trillion in the system to moon crypto. You just need Gary Gensler telling you to get out of stablecoins. So I'm hoping that is an answer that works for you. Crypto Predator is here from Romania. Welcome. Okay. Asia stimulating, more to come. Okay. So yes, I did give the Chinese a hard time yesterday about sort of being a reverse indicator as to when they got back into the market. Obviously, if Chinese retail money comes back into crypto, that's going to provide an organic bid. Okay. Sydney is here from Australia. Welcome. Thoughts on BTC decoupling from S&P? Okay, so here we have S&P futures, and this trend line has made its rounds on the internet. Okay, so you have one trend line and a downtrend line and an uptrend line. It's almost like Gann style. You're sitting right at the intersection. So if they hold, great. If they break down, then you've been told. You got a false breakout and the break of a downtrend line if stocks crack. Frequently, what I notice happens with stocks is that it'll go down and then it'll retrace. And then it'll do that a couple times and then it will accelerate. So stocks didn't fall apart today. They may have to go back and fill some gaps. It may be crypto's turn to get hit. Crypto traded well. It's never wise to celebrate relative outperformance in crypto when everybody is like got a lampshade on their head talking about how much money they made. Okay, VIX, fear. So this is the daily chart of VIX. VIX, was trading in a narrow range. The Bollinger Bands were narrow. VIX broke out through the top, and now it's kind of coming back down. So you had kind of a spike in fear, but not enough to create a sustained uptrend in VIX. I suspect consolidation in the stock market is required. Bonds. All right. What's going on with the 30-year mortgage rate? I did a short today off a financial news headline that showed that if you had a $400,000 house, the Fed rate hikes made your mortgage payment, or theoretically would make a mortgage payment go up about $800 a month. Okay. Now, the article didn't mention what happened if you paid $400,000 for a house that's really worth $300,000. Okay. Or $200,000. That's kind of a quandary. This is the long bond futures contract. Okay. Is this a consolidation to go up? In other words, is this a sideways consolidation for bonds to go up and rates to fall? Sometimes bonds go up when people get scared of risk assets. Or is this a double top and a bear market rally like A, B, C, and you're going to have more bond market carnage? I can tell you this: bond market direction will dictate crypto direction. If interest rates start going up again and you wind up with a mortgage rate pushing to new highs, forget it. You're looking at ETH at 1,300. If bonds start rallying, okay, or bonds are stable, that's good for crypto. Okay, let's look at the Bitcoin chart on DeMark, just on PowerPoint. So clearly the move to 25,000 was a blow off top. I was willing to give it the benefit of the doubt. In some ways, it's not doing anything terrible, okay, because 23,452 is holding its support. So is this bad? No. Do I feel like buying the first dip? No, I don't. Let this develop. Sometimes the hardest thing to do in trending markets is to wait. So like if you're down here, if you got long in here, right, it can be annoying to have to wait. Should you take money off the table? Maybe. The reason to take money off the table is that it makes it easier for you to wait this out, right? If it turns into a crash, fine. You took some money off the table. It's very hard to tell a correction from a crash. Okay. Okay. Alex is asking, hey, Bill, can you give me your thoughts on what Coin Bureau recently sent in his newsletter about the market being bearish? Okay. Well, I haven't got the newsletter in front of me. I can make two comments. One, if people are still bearish, if this correction has everybody going, oh my God, the bear market is back, that's actually constructive, right? When you wash people out and you have them sort of remember the knife experience from the bear market, right? And that becomes the predominant thinking, like, oh my God, the bear's back. Like we did a little like clickbaity thumbnail today, like, hey, the bear's back, watch out. Okay. If people got all bullish and they bought the top, this is going to correct. But if the market goes, oh, well, I told you so, this market was no good, like our friend from the BIS, okay? You have to ask yourself, you know, do I want to trade with that guy? Okay, Solana. So Baby Whale says these dips aren't big enough to buy, right? That's a good way to put it, right? If you want a dip, you know, make him give you a big dip. Are you in a hurry? I mean, you needed to move fast when everybody was bearish, but maybe now you got time. And that's the market update, you know, right? Okay, Solana, everyone loved it. Okay. Everyone hates it. Everyone loves it. It goes down. 24.25 was supposed to hold, and a lot of these hidden pivot structures I had broke down. It's like I'm gonna buy the dips until it doesn't work. And then it didn't work. So you got to watch me be wrong on live television. Being wrong on live television can help traders, right? People are like, hey, I want a Wall Street war story. Okay, here's a Wall Street war story. I'm wrong and I have to recover. Now what? So you can watch me recover. And that is the PowerPoint market update. All right. Now let's go back to live TA. Daydream says, it's been a minute and I'm still a heavy supporter. Appreciate that. All right. All right. Live TA. Okay, so this is all about stocks, right? This feels like the big short again, just to go over this. Oil down 3%. Gold down. Silver down 2%. Bitcoin down 2%. ETH down 2%. Wheat down 2%, right? Everything is down. Like this just looks like absolute risk off. Get me out of here. Now, let's talk about how to chart S&P. Here's what S&P will do before it cracks, right? So S&P will go down here. This is just like a tutorial, and it'll help explain where we are in the world. So S&P will go down, and then it'll retrace 76%, right? So down 76%. Then S&P will go down. And then guess what? It retraces 76%. Okay. Right here. Down 76%. Okay. And then it does it one more time. It goes down here and then retraces 76%. So there's the drop. It's only 3 candles, but then boom, 76%. This is called a series of ones and twos. So 1 wave, 2 wave, 1 wave, 2 wave, 1 wave, 2 wave. Okay. And normally what you get after doing that is in Elliott wave terms, just to keep it simple, you get 3 of 3 down, meaning this winds up turning into a much bigger trend. And I've seen this like 100 times. Okay. Now, I'm kind of hoping that this is it, but it may not be. And if there is a risk to crypto, it is this going into March. It is this. Mr. Moby Dick, welcome. Thank you for coming in. Right. Baby Whale, Solana Moonboy in the house. Okay. The risk to crypto is equities. It's equities. Right. And it's also, like I said, the fact that this whole big short thing is happening because oil is crashing. I mean, this is US oil, 89-minute chart. There's no bid. This is like down only. Okay, let's go to DeMark. Okay, I got to log into DeMark. Not sure how I got logged out. I can tell you this much. Watching everything go down at the same time, I don't know, man. That's like 2008 visions for me. Okay, let's go to a 90-minute chart of Bitcoin. Okay, the good news is there's support at 23,700. That's probably holding up the entire crypto market right now. Basically, we're betting that we got to max bearishness and that this is the puke. Just a trip down to the bottom end of the range. Okay, ETH is a little bit of a different story, right? ETH has kind of started to count the other way. In other words, 1 through 9 is the beginning part of the trend. I know there's an intense demand to know the particulars behind this. I'm going to try and work on it. DeMark math is really complicated. And you know it's complicated because that's why they highlight the 9s and the 13s. So traders, you sort of like know what to look for. I'm concerned that ETH may have like 2 or 3 more days where they start washing people out because everybody who got in above 1650 may now be underwater. And this is like 2 weeks worth of ETH buying where people may be kind of hosed. Also on the ETH daily chart, it pains me to say that 1750 was resistance. So that's where I got smoked. I was like, you know what? They're going to blow through this. And there was 1, 2, 3, 4, 5, 6 candles. And then equities turned over. Right? Damn that legacy market. Right? Because I thought this was going to break out. And now, theoretically, if this continues, you could have 7 more down days in ETH. 7 more down days. So while it's good that, say, you know, Mastercard is allowing settlement in USDC, that's good. That's a good crypto news headline. But the market is kind of going down on good headlines. And that's not what we're looking for. Hans is here. Welcome. Okay, so let's look at Solana on a 4-hour chart. All right. Solana's got good support at 23. So I'm sure you're going to see a lot of this on the altcoin charts where you have support where the rally took off from in the middle of the month. Okay, near, which is also where I got kind of smoked tactically. Okay, let's go to a 240-minute chart. Okay, good support at 238. Now, this begs the question. If you did not sell, should you sell now? I would say no, not investment advice. Okay. Here's why. You want to wait in stuff like near. You want to wait to see if this is a range or whether this is like the 9 bottom, the first part of the trend. This is the counter trend rally. And then you want to wait to see if it starts breaking down again. Okay. In other words, I don't know that I would give up and start calling for a crash unless this thing just smoked through these support points. And all of these big cryptos are going to look similar, right? Where there was support from the last takeoff point and then it all gets unwound. Normally, if you're going to have a much bigger down move, you actually have retracements that give people hope. Now, I don't know that that's the case. I don't know. I mean, I know that is the worst thing to say on crypto YouTube is I don't know. I do know I want to practice good risk management. And if this thing starts to turn lower, I don't want to get dogmatic about crypto. I want to protect my wealth in case something stupid happens. Because something stupid can happen in equities, right? What Walmart doesn't know should worry us. The biggest U.S. retailer that normally does good during a recession is really cautious on the U.S. consumer. This is probably a good time to remind you about the concept of reflexivity. So back to equities. In reflexivity, you have the notion that markets drive the economy. Traditional textbooks will tell you that the market will reflect some sort of expectation about the economy now and say 6 months from now. George Soros, who is, a borderline left-wing evildoer, when he was just a hedge fund manager, he came up with this idea that markets, what they do actually drives the economy. So if you had an equity market event here and this got ugly, that could take a slowing economic environment and turn it into a recession like that. That's how you synthesize information from what Walmart is saying. Okay. John says, he misses me. I appreciate that. I welcome you to the new channel. Lotmo Crypto is here. Welcome, Hans. Huckleberry Native. He's ready with dry powder. Nothing wrong with dry powder in this market. Okay, let's go to DeMark in equities and see what we got. Let's just see what's going on. Doha is here. Welcome. All right. So this is 4-hour chart of SPY. Okay, that's S&P 500 ETF. So maybe you got one more heave for a 9 bottom. Okay, financials, banks. So banks went down. Banks came back today. Tomorrow is going to be a big day for banks. Same thing with housing, right? Housing gapped down. It opened higher, okay, but they wound up selling it below where it opened. So on one hand, they unwound the excess from yesterday. On the other hand, people were like, you know what? Yours. They sold it. SPY on a daily chart. See, this I kind of hate. So the good news is there's a lot of support just below where the market is. So if they do a flash crash overnight, they'll be flash crashing it into support at 393. The bad news is I don't like this DeMark work, right? You had like a 9 top, and then it started to count the other, like it was going to start again. This was the setup, and then it was going to go to the countdown phase. Setup is 1 through 9 in the direction of the trend. Countdown is 1 through 13. So it looked like it wanted to get started, and then boom. The whole beware of the failed rally. Pancakes and Peanut Butter says there's no news today. It's just FUD. That is also possible. I don't want to get hysterically bearish into a support point. I do want to be ready. I do want to be ready with dry powder in case something stupid happens. It doesn't look like that something stupid is happening right this second. Now, MicroStrategy, 13 top, big euphoric move on February 15th, new high reversal. Now it's below a key DeMark moving average and counting the other way. Yikes. Crypto stocks led the way on the way up, right? Let's do Coinbase. Okay, Coinbase, a very valiant move to 74, right? It takes out the previous 4th wave. Now, it's just pretty impressive, right? Takes out the previous 4th wave, invalidates the downtrend, and then it gets absolutely dropped. So there's not much pretty about Coinbase here, particularly since all these new highs were not confirmed by new highs in the DeMarker momentum indicator. Okay. Pancakes and Peanut Butter looking for dry powder, looking to have dry powder for GLDN and Bark, both of which are getting hit like all other altcoins, which sucks because I own both. Okay. This MicroStrategy chart is something to pay attention to. These type of signals, they have to be invalidated before you can get cowboy bullish again. Again, I think it's defensive mode till March. Bill, if you base the BTC price on the current system of perpetual debt, what would its value be? Infinity. Okay, this is true. The amount of debt in the system, which we can look at, we can look at bonds. I have that. There's too much debt in the system. So this is a treasury ETF, the 7 to 10-year treasury. Okay. This thing gaps below support, retests it, and fails. What? Right? That's horrendous for bonds. Okay, long bonds, which drive the 30-year mortgage rate. Okay, it's been 9 top, 9 bottom, 9 top, 9 bottom, question mark. You walk in tomorrow and bonds are down and rates are higher, you're going to need to get some money off the table, right? Or move your support points down. Again, it used to be you focused on the dollar index. Now with that mortgage rate upticking, that 8% level, somewhere in that 7 to 8% zone, the 30-year mortgage rate is going to drive America, not the dollar index. Okay. Speaking of debt, let's look at junk bonds. So junk bonds, you have a huge stop fishing exercise yesterday, and you have a 4 count. Now, when it comes to the transition between setup and countdown, or the beginning part of the trend and the big part of the trend, sometimes the best time to get a trade set for the bigger part of the trend is on the 4th count. So if this was a failed rally today in junk bonds and speculative debt, then tomorrow is not going to be a good day. So this is HYG. There's TLT and IEF, and I recommend keeping an eye on that. Now, back to crypto. Polkadot, the coin I just can't stop loving. Here's the weekly chart. So let's go to 4-hour Polkadot to see if they're giving us a bargain. I know they are. Okay, so tough to control how much I like Polkadot, right? 9 bottom, decent candle, trying to get follow through. Can't stop liking Polkadot. The other thing I can't stop liking is Avalanche. Okay, unfortunately, the fact that I can't stop loving it is not shared by the market because they're selling it at 21.15. So there's a big DeMark point there, and every time Avalanche tries to go through it, it gets slammed. Now, if Avalanche breaks through 21.15, Avalanche could carry the entire market. So let's sum this up. Oh, somebody was looking for MOVR. Okay, so you get the 13 top, right? You get the blow off top, the 13 top, and now this is essentially confirming that the top is in. Note how this high was not confirmed by a new high in the DeMark momentum indicator. Okay. Now, somebody said something about Matic. Okay, Aruna wants me to look at Matic. So, ironically, I did get something right here. I questioned this narrative. I questioned it. I did not have a good experience with the NFTs on Matic. Everybody was like all aglow about this, and then they laid off 20% of their people, and that was actually the top. Matic made the top. It was a buying climax. Looked like this whole market was going to the moon. It turned out to be a 5-wave top, and then it corrected. Now, the good news is there's a lot of support at $1.27. And, you know, my Matic jokes aside, if support in Matic holds, that will be constructive. Okay. Again, this thing has retraced half of its entire down move. And it went right to a major support point, a resistance point at $1.50. So I'm still not terribly excited about this. Like when I look at this, I'm like, well, either Bitcoin's going to 40 or this is going to correct a lot and possibly take the market with it. Okay, STG. Okay, 4-hour chart of STG. Okay, everything is going to look like this. It's going to have a 9 bottom, and then it's going to have this uptick. And if there's a failed rally here, okay, this is a 4-hour chart, beware the failed rally. Failed rallies are bad, especially when you're in this type of market, right? Like, you know, ETH has tried to go up here, right? You got a nice couple green candles. That's good. That's good, right? But if this thing fails again, right, then dip buyers are losing money. Remember, it's not a bull market until you can buy a dip and make money. Everybody's trying to buy the dip all the way down, and that's why it just keeps going lower. Because everyone sees the dip. Let's just label this. And I mean, I know I'm stating the obvious, but sometimes you need to look at the obvious when you're working out a view. You know, live TA is exciting when I'm psychic, and I'm trying to make live TA interesting when I'm not. So people bought the dip here, right? Looked juicy, and then they got stopped. And then they bought the big dip here, and then they got stopped. If it happens a third time, you're going to have bigger problems. If it doesn't happen, then maybe we can go, okay, you know, maybe ETH at a minimum is going to retrace some of this down move before anything else happens. Like maybe ETH's got to go back up to 1642. You do not want to see this rally fail. You do not. Okay. ANKR. Okay, so somebody's saying he watches me every day. I appreciate that. Coin Bureau hasn't turned bearish recently, but discussed the possibility that we may be in a macro bear trend. All right. I actually think we're in a macro bull trend. When you have bull trends, especially coming off a gigantic bear market, you can have deep, nasty corrections. Okay, so Anchor had the gap move higher. Now it's starting to count to the upside. Honestly, in this environment, the people who are holding Anchor, even though they've been suffering for a long time, the people who bought Anchor at less than a penny are probably selling it to people who are paying 5 cents. Right? In other words, people respected resistance. I wasn't respecting resistance. I should have. They are here. Now, that said, this is counting in the upside direction. So people are buying dips. And if they are able to buy dips in this, and this thing is holding here in 2 days, then maybe it's the bigger the base, the higher in the space. Which is why I don't want to why I don't think this is a macro downtrend. I mean, this has already been destroyed. It's already been destroyed. If anything, it's going the other way. The question is, how much consternation are you going to have to put up with in equities? Okay, Steve J thinks YFI is warming up. Got a lot of people into like those DeFi coins on the stream, which is cool, right? Okay, here's the 13 top, and now they're trying to push it the other way. Okay, you got to be careful if 8,800 fails. Okay, they're attacking this. You do not want to see the false breakout. You do not want to see it go up here or go up here and then fail. Failed rallies at this point are bad. Okay, bad. Okay. Okay, Carlos, what did you miss? All right, let's sum it up. You have to manage risk in this environment. If you're long, you have to protect your profits. If you protected your profits, you got dry powder, most likely you're going to use that dry powder in March. I'm hoping the equities trade has run its course. If the equities trade continues, crypto's going to get hammered with it. Again, dry powder and discipline are key, because if you have to buy this market, you will have to buy it when it looks like it is going to zero. That was the lesson of 2009 and 2010. The dips, whether they were one day or frequently they were multi-day dips, they made the market look horrible. It made it look like the bear market was back. I don't think the bear market is back. I think the fear of the bear market is back. That can drive prices lower, but that's where bulls want to be, right? You want to be there at max fear. We're not there yet. We may be there soon. So that's the market update for today. I'm Bill Noble. We will see you next time.